Before you place your next trade, watch this. The Japanese yen just snapped back as inflation surprised to the upside. Natural gas is ripping higher on extreme heat across the US, and the DAX, well, it's recovered somewhat after dropping more than 1% after central banks reshaped the rate outlook in Europe. Welcome to your daily market brief. I'm Francois Duplessis, your market analyst here at ATFX Africa. In today's market brief, we'll have a look as to why the yen has reversed direction, how natural gas is reacting to a dangerous heat wave, and what's behind the latest slide in the DAX. If you're trading Forex, energies, or indices, this one is for you. Let's kick things off with USDJPY. The pair dipped back to 145 today after Japan's core inflation jumped to 3.7%, the highest since January 2023. That's the third straight monthly increase, and it's reigniting bets that the Bank of Japan may hike again this year. However, the BOJ governor's cautious stance remains, but the messaging from the Bank of Japan has turned more hawkish, especially with wage pressure feeding into prices. Traders are now reassessing the rate differential between the Fed and the Bank of Japan, especially as Fed Chair Powell this week held off on committing to more cuts. Looking at the USDJPY on the 1-hour chart, we're seeing a minor pullback from the 145.2 zone. If the pair drops under 145, we could see a move towards 144, especially if the Bank of Japan commentary turns firmer or US data softens. But a bounce above 145.7 could still put focus back on 146.2. Next, natural gas is surging. Prices hit a 10-week high at $4 per 1 million British thermal units. The catalyst? A brutal heat dome expected to bake the US Midwest and East Coast, which feels like temperatures of up to 43 degrees Celsius. That means huge cooling demand, and gas-fired electricity usage is about to spike. Add to that, inventories rose just 95 billion cubic feet this week, the lowest build in 2 months. The EIA report showed stockpiles are still 6% above the 5-year average, but the heat is giving bulls the momentum for now. Natural gas is now trading at multi-week highs, breaking out above its April resistance. Technically, there's room to run towards that $4.3 mark. But watch for possible profit taking if weekend weather models soften. For traders, this is a breakout environment, but mind the volatility. Finally, the German DAX, or the German 40, fell over 1% yesterday, dragged lower by shifting central bank policies. The Swiss National Bank surprised with a 25 basis point rate cut, while the Bank of England paused and the ECB's tone remained cautious. Weakness in energy and tech stocks pulled the index down, despite upbeat analysts' commentary on select firms like CompuGroup Medical. The index is currently sitting just above 23,200 after the Thursday sell-off. Watch for the support level at 23,050. A break there opens the door to deeper losses, especially if next week's Eurozone data underwhelms or geopolitical risk returns. If the support, however, holds, we may see a rebound back to 23,400 or even 23,700. As we head into the weekend, markets are still on edge, especially around Trump's Iran decision, which could come in the next 2 weeks. In Monday's brief, I'll walk you through the weekend's headlines, energy market fallout, and what's to expect as traders position for the end of the quarter. Don't miss it. Make sure to subscribe and hit that notification bell so you're always one step ahead. And then that wraps up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Simply head over to ATFX Africa and experience the difference for yourself. Until next time, traders, stay sharp, stay focused, and trade smart.